Louis Porcelino, Pat Tabbitt. He's not a figment of my imagination. He actually exists. Came in from Houston. Anthony's over there behind us, who you see all the time, right? And then the rest of the team is scattered around the country. So yesterday we had some technical difficulties, and the internet and IT people came out, and now we are back up and running, and we don't have any problems. Pat's in town doing the finishing touches on the indicators that we're going to have on Ninja Trader and offer on Man Over Market. So we're going to get the programs launched as soon as possible, and also we're talking about the different areas of resistance and what we think is going on with the market. So Pat and I have been talking about it and talking about the different trading zones. We've broken out of the trading zones. We'll get to the charts and talk about it, but I think right now we both agree that we're in an area of consolidation.
Absolutely.
Right. And on the upside, we need to get above
2015.
All right. So above 2015, then we can get back to the 2100 area.
Well, at least the first stop, I think, is 2050.
2050.
Yeah.
Okay. And then
we have another trading rate.
What's the
between 2015 and 2050?
Right. Which we'll show you when we get down there. How about on the downside?
On the downside, if we break below 1990,
correct,
then we have a chance of going to 1960,
all right,
which is the next balance area, 1960 to 1990.
So 1960 to 1990, which we just came from. So we've got a sort of a delicate situation, because when you take a look at when we came up from that 1960, in my mind, I still think we have some poor structure down there because we kind of blew up, in 2 days, right? I think we took some of it back over the last 3 days, which is healthy because it didn't just break, it didn't have a vicious breakdown. It's been slowly going down and filling in some areas that needed to be filled in.
Yeah.
So we're going to get to, and if you have any technical questions about any of the indicators that you see, the daily pivots, the CCI, and all the stuff that we do on the profile, Pat's the man behind that. I mean, Pat's background is been an engineer for
35 plus years.
35 years. Taught himself. He had some interesting stories about when he first started trading, and the best story is the fetal position trade, right? We all get it as traders.
Fetal position trade,
right? So you get that fetal position trade when you. I used to get those like once a month when I was in the pit.
Right.
From averaging, when you buy it and you go, I love it here at 2000. I'm gonna I really like it here at 2000. Well, you better love it at 1995.
Right.
They add to that position.
And really love it at 1960.
Right. So when I met Pat, he came to Chicago back in 1997, 98, right? And he kept telling me that the S&P was going to go to 600. I kept looking at him going, this guy is nuts. Well, he was right. It went back there twice since then. So, but anyway, let's get to sharing the charts. And if you have technical questions about the different indicators, Pat's the man behind that. And these are things that we put together collectively over the last since 1998 since we met. So let's get to sharing the charts and give me an outlook of what's going on for today. Put this on so we can get that info. All right.
I noticed you got a lot more gray hair.
Oh yes, yeah. Here, I didn't have any gray hair there, and I have to put glasses on. All right, so let's go to chart sharing. I'm going to bring this one down first. Okay. Let's share this. Let me see. All right, let's do it this way so I can bring things in. All right, I'm going to share this chart. Okay, share. All right, now I'll leave this here so you can hear me. All right, so here's the day. Here's a day chart that we've been talking about for S&Ps, and basically 1831 was the low that was put in last month when we had the big breakdown, and that 1831 was, I think, the first time since we've had limit positions, circuit breakers, after the meltdown in 78 or in 2008 that they really fell into effect, right? So from the high down to the low, I put that 50% area right here at 1982, the 1983 area. And as you can see, we fell short now here of this 2018, which would be the 61.8% retracement. So this falls right in line with Pat's research. And what we do, so you understand this, we have all the same tools. We all do a little bit of the research, and then we kind of get some confluence and some opinions that, based on all the other tools that we've put together to try to get a good idea about direction of the market. Okay. We had some numbers come out today, PPI, retail sales. They were lower than expected, kind of made the market break from the opening. So I think this is the range we're talking about, right? 2018, Pat's talking about the market not holding the 1990.
Well, we basically have several 3 to 4 day balance areas. Okay, the one we're in right now, so the most recent one, goes from the 1990 level to 2015.
So let me.
So as long as we don't break that recent balance area to the downside, we have a chance of taking out 2015 and going to the next balance area that goes back.
Okay, I can get to it, but
basically
let me show this
from the break in August.
So this was the rally that we this was the single prints left from this rally right here. Okay, so if I bring the chart back, all right, and we fill these in overnight. All right, so we had these were the remaining single prints from that was put on the 8th. Okay, so we had this big rally on the 8th. All right, there's the day session trading from the 8th. I keep doing this. But I'll straighten it out.
To move it to the left a little bit, so you
okay.
Yeah, there you go. Keep going. Okay.
All right, here's the 8th. All right. Right. That's the top of the rally.
And you've got a lot of splits there. So, but basically, anyone can see that we're in that range. I mean, here you only show the range down to 1998 or 96 or whatever it is. But we're in that consolidation, which we broke out of when we had that somewhat trend day that took us up from the 19.
Here's the 9th. Let me just go back a little bit here.
It took us up, from the 1990 area all the way into this range we're in right now.
Right here.
So so you're catching the left there. You're catching the half of that trend day.
Right. I'm trying to get it up.
Right. So that trend day there took us up into this new right there, that break. That's good.
Okay.
So we got into this new trading range from 1990 to 2015. We're still in that range, and as long as we stay in that range, the market has a really good chance to take out 2015 and go back up.
So this was the trend day from the 8th, right? So from the opening, we trended up, and then at the end of the day, we ended up putting it in. And these were the last single prints, which they took out overnight. Okay, so that's the range that we're talking about, and
it's healthy to actually build some volume there, find support, and go back up from there. Okay. That's a very healthy thing to do for this market.
Right. So what the other thing that we were talking about is that we had
that's one scenario, right? We hold here. We stay within balance maybe today, and and then possibly the end of the week or next week we go back up to the high of the range of 2015 area of this recent balance, exceed that range, then we have a chance to run up to most likely 2050 would be the next top of the range on the new balance area. That's one scenario.
So yesterday we failed here.
The other scenario is we can't hold 1990, and now we go back into this prior balance area, which goes all the way down to 1960. Build another base there and see how we act, and then we'll figure out what to do after we get there, if we get there. So we have two scenarios. Right? We're going to let the market tell us where it wants to go. And then for right now, we're assuming that we have support right now where we're trading, and that support is going to hold true until we get out and trade below 1990.
All right, so there's our so all last week after we made this breakout, I kept telling you I thought that the market is going to go back up and test the 2050 area. We had a little bit of a failure up here because yesterday it rejected, it made a high,
1475.
Right there it is.
So we're in general terms, 2015. That's the high end of this current balance area. We got a trend one way or the other out of it. So that's what we're looking for.
Okay. So when we look at the market today, we're looking at the value area low of 1996 and a quarter. We put the bull bear zone at 1985 because at the bottom of that range, and if we get under that, we expect that the market will then start trending down below this balance area, which we just showed you. Volume point of control, VPOC, 1995 half, right here in the fuchsia color, and then the high of the value area is 2010 and a quarter. So the market absorbed the bad news this morning, so I'm pretty. We're going to be watching. Let's see what happens on the opening. See what happens in bracket BC, and then we'll see what kind of balance area we put in, and see if that will give us a key to the direction of the market today. But if I had to make a choice right now, I'm thinking the market is going to be a two-sided trade based on. If you take a look at the overnight action, we've got a pretty well distributed. I keep doing this. Hold on a second. And you got to fix the chart for me eventually.
You got to go the other way because you're way up there, too high.
Yeah, I know. I'm too high. I'm trying to
up this way. There you go.
Keeps bouncing up when I go too far.
Yeah. It's trying to tell you it's going up.
I wish it was that easy, right? Okay, I keep making an error to the upside.
Right.
So this overnight profile is kind of.
It's really well balanced.
It's well balanced.
Yeah,
it looks
it's
like
pretty well balanced.
It may fill in a little more down here, and then
with the point of control on the high end, sort of, very close to the point of control from.
Here's the point of control yesterday, 1995 half.
Yeah.
Right.
Yeah. So we're very.
So look for a two-sided trade for the market's going to. And remember what our key are. The keys that the market has to take out either the Globex high or low to be important, and it has to take out at least by 4 or 5 ticks for us to consider that a significant break. All right, so let's take a look at. We've got the 5-minute pivot right here at 1993 and a quarter. So we're sitting. It's sitting below us. When I talked about the sisters, it looks like the Russell is its 5-minute pivot is above us. All right, so that's telling me that I'm going to get a choppy trade today, or until these can agree with one another. All right, and I've got the Nasdaq, the Dow is also in a sell, as you can see here. Here's the 5-minute pivot, was taken out just recently, and now sitting above us. All right, so the short-term trend in the Nasdaq and the Dow and the Russell are let's say in a short mode, and we have the Nasdaq and the S&P, and the Nasdaq is flirting with its 5-minute pivot, and it's still in a buy. So that's why when I see this, that I always kind of hold off and let the market give me a direction during bracket B and bracket B, bracket C, see what kind of action we get during the day.
IB range.
Yeah, the IB range. So as soon as that's set, then hopefully all right, we'll find out whatever all that stuff went. So let's talk about gold. Now, I drew this chart, when I put it together, I did it because I wanted to get a significant area where I thought the market came from, which was, basically 678 or whatever it was. And then the ultimate high was like 1923. So, the market to me, here's the low that we put in for the year so far, right in here, 1069.80. And I think the high is, it's a significant high for me right now is going to be back up into this area. The market spent most of the year between 11:30 and 12:30. I think the market is right now in a bullish. In our day pivots, it's in a buy, and I think the market's going to head back towards the 1200 area. And we've had a significant rally, and we've talked about this last week that if you use those highs and lows, it's back about this 38.2% retracement. So I think that the market is going to go back towards the 1200 area, and I don't have I really don't have a great feel on gold because I think I have to. Where did all my charts go?
How do you know which one you're sharing, by the way?
That's right. Because I think
so all you know, they're seeing a commercial for Microsoft.
Go here. Got to click on everything again.
Double click. You shook the screen. All away.
All right.
So which one is you sharing? Can you tell?
This one.
Okay.
This profile.
All right.
That's
a gold profile. All right. Sorry, everybody.
5 minute. Go to 5 minutes.
Balance.
5 minute. 5 minutes earlier charts. Right here.
Is there
gold 5 minute?
All right.
I'll pull that in.
Right here.
Yeah, I'll make it big.
Did you see this is the one I'm sharing?
Yep.
All right. I'm sorry. All right. So gold right now is trading above value. All right. Value area high of 1168.70. Value area low of 1153.90. We got a bull bear zone way up here at 1186.60. 1186.60. All right. So then let me go to ZB. Bring that in. So the bonds also been sort of in a consolidation mode. We've got the bull bear zone in bonds at 158.14. 158.05 is the high of value, and 157.25, 21 is the bottom of value. I think as long as the Fed does not raise rates, I think we're going to see the bonds back up above 160 by the end of the year. So, that's actually where we came down from. I think the high was what, about 165 this year.
Like, was it 167? Or did I dream this number?
Yeah. I know it was up in the upper part of the range, right?
Right.
So,
and that has a lot to do with the cheapest to deliver instrument and the break between for a long period of time. The 30-year went out. They didn't have 30-year bonds. Okay, remember that?
Right.
They kept it at 20, and then they reinstated the 30-year maturities. So that's how all of a sudden we had this 20-30 point break, from one futures contract to the next, because the cheapest to deliver instrument changed, and now we're back to the 30-year treasuries. So anyway,
now we'll talk about oil. I think we've talked about it. I thought oil. Let me bring the CL chart in here right here. So here's the CL chart that I drew. I thought oil would, I think it was bullish, and I was hoping that oil go and fill its gap up here at 56.5 to basically 55. But as you can see,
it's a terrible word. Hope.
What's that?
Hope is a terrible word.
Yeah, exactly. No hope and wishing.
No hope and wishing. Not allowed.
We're still in a bullish mode. I think if oil gets under $42 right here, then you're going to see new lows in oil. So this is a day chart from there. I thought that we had a chance, but every time we get up to the $50 area, they keep selling it off. So I think that that's what we've been looking at as far as long-term position in oil. I think I have a bet out there that I thought that they're still going to make a stupid low for the year. So
I think they need to make a stupid extreme to get this market to stabilize.
Right.
We're nowhere near that, in my opinion.
Okay, so let me pull the S chart back here. Can't believe that happened to me. computer mouse went in. There we go. All right. So just to recap S&Ps, I think we have to understand that we're trading below value, right? Let me put this back up. We're trading below value, and then I think the market right here, if you look at our CCI is sort of in a neutral position, even though you're seeing some red, the sell-off right now. I think we're going to have a two-sided trade till we get all the sisters agreeing. Of course, it's always a key that we have to take out either side of the Globex high or low. So, and then get back inside of value. And, remember value is defined as what was 68% of the previous day's trading range, right? So we hit it from 2 and 10 quarter down to 1996. So look for a two-sided trade. Maybe one of these days that you're going to be able to fade both ends of the market. So as it reverts back to the mean. So looking for a two-sided trade. We're stuck in a range. And the other thing is that the range has been consolidating, so getting smaller. So when you get smaller ranges, eventually you're going to get a breakout one way or the other.
Absolutely.
Right.
Yeah. It's like coiling the market. Eventually it'll pop.
Right. All right. So sorry that I screwed up the chart. Pat's here all the rest of the week. We're working on a lot of different things so we could get the man over market funding program going, and also get our indicators alive on Ninja Trader. Any questions over there, Anthony?
Nothing yet.
Okay. All right, everybody, stay with us on Twitter. We'll put our updates. Remember, I think we're going to get a two-sided trade till we can get all the indices going the same way. All right, everybody have a good day trading. Talk to you tomorrow, and good luck.